keeping expectations in check because this is, after all, an interim budget ahead of a general election. So really, what are the expectations, modest expectations I might add, that citizens of this country, investors in this country, businessmen in this country can have? We're very pleased to welcome our Dinesh, President, CII and Chairman, TVS Supply Chain Solutions. Mukesh Patani continues to be with us. Mr. Dinesh, I'm just going to get straight to it. I have a slightly workman-like approach, and I'm saying this is an interim budget ahead of an election. So while other budgets, expectations can run wilder, this one, I think there are modest expectations that industry has. What are they?
Thank you. Yes, you're right. It's an interim budget. So in our view, it is all about continuity. It is about giving the general direction as to how the government continues to look at both from the growth prospects, the fiscal deficit, and most importantly, how various sectors are being looked at for equitable growth. Because the economy is going to prosper, you need all three being addressed in, I would call it, at least a message, if not in specific actions.
Okay, so the messaging you're looking at carefully. Specific actions, there is some scope for specific action as well, and particularly when it comes to incentivizing investment, because we have noticed that private investment hasn't kept pace with government investment, and so crowding out phenomena, something that's been analyzed this past year in great detail. Any specific action that you could realistically expect when it comes to incentivizing investments?
So let me start by saying on the spend, on the investment by the government itself, we are saying that it's not the time to take the accelerator off the pedal. Yes, we do understand, you can't have the same rate of growth as you had in the last year. So CII's recommendation has been a 20% increase in terms of the spending on capex for the investment in infrastructure. That will approximately come to about 12 lakh crores. So that's one specific area which we are saying from the government side of it. Obviously, the government expectations has been, and rightly so, that private sector investment will follow. As we speak, from whatever we have seen of the kind of capacity utilization taking place, I don't think there is any specific incentives required to make that happen. Having said that, there are two things which we have specifically said. Continuation of the 15% tax rate regime for new manufacturing companies to be set up for a longer period, and equally the focus on PLI and employment-linked incentive plan to be introduced, especially for sectors like logistics, tourism, health, etc., which directly contribute to a significant upsurge in terms of jobs. So these are the, I would call it, focus areas we are talking about to further support this.
Okay, and I'm tempted to bring in Mukesh's assessment on whether on those specific actions that Mr. Dinesh has just outlined, we can expect movement?
The context to what is likely to come in the next 1 hour is three important statistics. We are touching a GDP growth rate of 7% against a world average of 3%. We are officially now the third largest fintech economy in the world after US and UK. And we are now the fourth largest by market capitalization insofar as the equity markets are concerned after US, Japan, China. We've overtaken Hong Kong. So we find ourselves in a very interesting situation. And then we have a situation where still about 100 million people are below the poverty line, a fairly large middle class and growing economy. So what does one do with all of these, interesting statistics around us? It has to be growth-driven budget. Focus would be equal on agriculture, youth, women empowerment, employability. I think Dinesh cited out some important statistics. I think I would anticipate that the 15% corporate rate of tax for new manufacturing unit, which is officially supposed to be expiring for manufacturing, before March 31, 2024, to be continuing. I think there is scope for creating incentives is not the right word, but I would say, lend thrust by way of non-tax incentives, continuation of PLI, employability. There has been a thought for last several years whether you should bring back investment allowance, a capital allowance, which used to be there in the 80s and the 90s to give thrust to private sector capex. For reasons well known to the government, they have not brought in any changes, but I think this is a good inflection time for us, given the growth trajectory, to look at it.
Okay. You know, you've, in a sense, touched upon business sentiment. You've also said very clearly that government spending on capex should continue. It's still needed to power the economy. Break down the business sentiment for us, and specifically from a capacity utilization perspective, because I know CII crunched those numbers with its members. When is there going to be a marked step up in private investment?
See, if you look at what has happened in the last 2 quarters, our surveys have shown that cutting across sectors, the lowest has been 75% capacity utilization, and in some sectors we have already seen 100% capacity utilization. But really, if you look at from a global scenario, and especially the geopolitical situations which arose, and as was pointed out, I think last year we talked about global growth as being less than 2%. So that is, I think, one of the main reasons why you have seen that the current capacity has been enough for, I would call it, the domestic growth. But having said that, if you are looking at another 7% growth over the last 3 years of 7% or more than 7% growth, and say as forecast, as you would have heard, is in excess of 7%, we do believe that we are already there. So it's a question of each of these sectors coming and private sector investments coming in to make that up from a manufacturing perspective. If you look at from investment in infrastructure, I think this crowding in or the support which has been given and that getting down into the states. So if you look at the center, the maximum expenditure has happened. So the rural areas, the focus on the infrastructure on the state side, and you see already some of these states have caught up significantly. So the rest of states catching up will be what I think will mean even more investment from the private sector, because at the state level is where the smaller companies will be investing in. So I think you will see that happening sooner rather than later, and you will already have seen it in certain sectors, but you will see it spreading across more sectors as you go along.
You know, I don't know if it's realistic to expect too much in the interim budget, but I say this is as good an opportunity to send a strong message out to government on what business critically needs at this moment. For instance, Mukesh talked about the investment allowance. I'm going to ask you, as honestly as possible, to mind the conversations that you have with all your peers and say if there's that one thing which is still a bit of a prickly area for businesses, which could be tangibly addressed in the next few months, today or July.
So actually, I wouldn't say it's a prickly area, but it is a very difficult path to navigate. And just as we have navigated the difficulty in the geopolitical situation and the inflation and managing that from a fiscal deficit as well, I think the next issue will be the transition or the correct transition from both energy and sustainability initiatives. So there, how do we support the MSMEs? How do we support the small companies which are based not necessarily on sectors which are today seen as high growth areas? So those are the areas where I think both from industry perspective and from the economy perspective, I think both the government and the industry have to work together to make that happen. And that, I think, direction I 100% believe will be there in the interim budget itself. And as you said, that hopefully will be addressed even more squarely in the final budget. So there it could be a fund to support them, digitally transition to make sure that they utilize the benefit of the digital public infrastructure in a better way, and equally so when it comes to supporting the transition from the climate side of it.
Indeed, but they're still talking about old issues that plague them, like access, easy access to credit, more painless procedures when it comes to taxes. Again, sort of pedestrian things, but those are areas that we've seen moves on in recent years. I just want to, of course, our viewers are seeing the images on the screen, I'm sure, but, Finance Minister Nirmala Sitharaman arriving in Parliament, so now you have the countdown beginning in real earnest. I interrupted your thoughts when I raised that point.
I just wanted to add that we did, CII has already mentioned that while the budget is not the right place to talk about it, that there should be a 3-tier structure on GST, to go back to your point of ease of doing business for the smaller companies, because they find it difficult to manage because of the multiple tiers.
Indeed. Well, I think we're going to take a quick break at this stage. Don't want to miss any action right here in the NDTV studio.